Good afternoon. From Before the CME, this is Chris Robinson, editor and publisher of the RobinsonReview.com. So what are we looking at today? We've got one business day left in February, and just the wheels have kind of fallen off here in the grain markets as well as the livestock markets. So first things first, you've got to look at what's happened with soybeans. In the month of January, we went from near 9-month highs to now we're near 6-month lows. We broke almost $1 after what looked like a promising rally. A lot of people were looking out for next year's soybeans to possibly get to $10. It's almost like the market knows that everybody wanted to sell $10, and then we've had this correction. There's a million different reasons why we've had this correction. At the end of the day, it is supply and demand. It is what the market's expecting versus what people think is going to happen. But the number one issue, I think, has been the coronavirus and the uncertainty that it puts on all the markets in Asia. It's really no two ways about it. So what has happened? Well, it's given traders, it's kind of a trader's market, a speculator's market. If you did not get married to a position, there's been a lot of opportunity here. For a producer, it's been a disappointing month. It started out like the year looked like it was going to be really good, and then the market's taken that away. So it's just a prime example of why if you're a hedger, if you're a producer, you need to hedge. You need to get your risk on paper. Just waiting to see what happens can be costly. And when you see when a market moves $1 a bushel, if you're growing 100,000 bushels of something, that's a $100,000 loss on paper. It's great when it goes up, but you have to have something in place for when it goes down. So I can't stress that enough. So what's going on right now is now we're going to be looking for the bottom, looking for support. Then it comes into money flow and technicals and all the kind of stuff that makes people's eyes glaze over. But again, I would just leave you with that. Lots of opportunity. Nothing set in stone, but these markets are moving. Every night you go to bed, there's a risk of a move up or down. So just make sure you're hedged. Also, if you're a speculator, if you've got a position on, make sure you keep a very tight buy stop or sell stop. If you're short and you want the market to go down, then you need a buy stop in case it goes up while you're asleep. If you're long and you need the market to go up, you need a sell stop because something can happen while you're asleep. You wake up and you're, oh my goodness, what happened? So soybeans, number one. Number two, you've got to take a look at the correction that we've had in live cattle and also lean hogs. But a tremendous correction. We've lost half of the rally that we enjoyed from September to January. It was a great rally. We were at multi-month highs, and lo and behold, this market is corrected. Now you're going to see people come in when a market corrects. We've lost half of the rally. You're going to see speculators come in to try and do a counter trend. But again, if you're a producer, I really hope that you had a hedge on paper, because even though you're still long all those animals in the pen, you haven't given away all those paper profits if you had a hedge using the markets. So use the tools that are here to protect yourself. Now, as a speculator, it's a great opportunity to try and see, are we going to make new lows? Are we going to snap back? Lots of opportunity when a market moves. It's like a rubber band. Will it snap back? We'll see. Then you've got to finish up with the lean hogs. We had some bullish news. There's possibly a vaccine to stop the ASF virus, which has decimated China's herd. We also had two things. You had the phase 1 deal signed with China, and you also had the USMCA deal signed yesterday by President Trump, and those should be positive. So why is this hog market going down? It comes down to the one word, or whatever you want to call it, 3 syllables, right? The coronavirus. That's the risk. That's why you're seeing hogs move lower here. Also, the market's very well supplied. So again, hopefully if you're a producer, you had some risk on paper. At some point, we should get oversold enough that we have a correction. Lots of opportunity. And again, hopefully I went over that. It's just a classic example of why, if you're a hedger or a speculator, you need to have an exit plan. These markets, when they get volatile, it's like stepping out into traffic. If you don't have a plan to get out of the way, it can be pretty painful. So that's about it. This is Chris Robinson, the Robinson Review. Give me a call if you need any help.